All right, people, we should be live. Just give me a quick confirmation in the chat that you can hear me okay and you can see my screen. And we'll kick off today's session. We're very excited to have the legendary Miad join us once again for his views on the macro picture. And in today's stream, he will be sharing an insight of Bitcoin, liquidity, the dollar, and the yen. I think it's going to be a great stream today because we're looking at things from a higher time frame perspective, and there's going to be plenty of golden nuggets. So get your pen and paper. I think what Miad is going to share today is going to be very useful and insightful to take away and add to your trading game, or whether you're more of a high time frame investor. It's certainly going to give you some food for thought, and I think it's just going to be another belter from Miad. But as we always do before we proceed, special thank you to PrimeXBT for sponsoring or partnering with me for the best part of 3-4 years now. I've been streaming since September 2020. And as always, anything said in today's video is not financial advice. It is just purely for educational purposes. And the last thing I want to mention is that if you go to the description, a few people were still asking me, where is the form for the 3-month mentorship that I'm running? Just a polite reminder, it's not a paid group or a paid service. It's in partnership with PrimeXBT. The link to that form is in the description of the chat. And without further ado, I want to bring on today's guest. Miad, are you there, brother?
Hello, EXO. Hello, community. Thanks for having me.
Great stuff, man. And just give me a quick audio check that you can all hear Miad on his mic, and we'll kick off on today's stream. How have you been, Miad? How's life? How's the start to the new year?
It's been great. Thanks for asking. So we've been working all last 2 months, run up to into January, to sharpen our tools, kind of build more tools to our tool set, and hopefully loads of those things I'd like to share today. Kind of when to use certain tools, what regimes we kind of deploy some certain things that work best. And this is what's going on today's stream all going to be about.
In terms of 2025, it's quite a fascinating year for trading, wasn't it? I mean, it was legendary, in my opinion, in terms of the volatility that we had. If you remember back in March, April, we had the Trump tariff debacle, which kind of saw equities and Bitcoin, I wouldn't say crash, but there were fairly deep corrections in the market, and same on equities. And it's just been relentless since, hasn't it? Since April, the markets have just been grinding up higher all the way through to November. And I know there's a disconnection between Bitcoin and equities and indices. If you look at Bitcoin, it does somewhat remind me of the environment that we were in 2020, late 2021. I think Bitcoin in November 2021 had topped, but equities and indices were still trading higher all the way through into the 3rd and 4th week of January. It somewhat gives me some reminiscence of that, because we see Bitcoin breaking down in October on 10.10, and thereafter it's just been breaking down lower since, and equities and indices have been grinding higher. It's a question of, well, could this be a top? Is there some potential downside risk in indices? I think there could be. And the question for that is, well, then how does that impact Bitcoin? And would love to get your thoughts on just starting off from the very high level overview of what your thoughts are with indices. Do you think we've had quite a really strong bull market run that seems to be losing momentum up here? Now, you can see over the last several weeks, we are starting to transition from this trending environment into a slightly more rotational back and forth environment over the last 2-3 months. Over to you, Miad. What's your thoughts here? What are you thinking in terms of indices, Nasdaq, and equities, and how that may impact Bitcoin?
To go back to talk about what happened in March, I totally agree. I think nothing like volatility to bring out the truth in the markets. A lot of people, you sometimes find that they hold positions or hold beliefs, and then when volatility hits, everybody just acts and kind of realizes, oh shit, I was on the wrong side here. So I kind of feel like volatility is a great way just to purge and kind of just bring the reality to the forefront. So everybody needs to reposition when volatility hits. Just to kind of agree with you what you said as well. So the better part of I like to say into Q4 and starting into Q1, equities haven't moved far, right? They kind of dipped a bit, went back up. I appreciate they hit all-time highs, but they're not really driving up like commodities are doing. It is a slow market. There's a reason for this, which we hopefully today will dissect, but it's not going very far. Equally with Bitcoin, we were hoping to see some form of a bottom formation in late Q4, so around November. We kind of got that, but it's not giving us the upswing we really look for, and now it's kind of even slowing down again a bit. It kind of is not your most favorable environment you usually like to see in a risk on environment. This is not it.
Yeah, I agree. I think in all honesty, again, when I see the structure on Bitcoin here, I've been vocally advocating for the fact that I still think there is possible downside risk here, and I think it wouldn't surprise me if we did trade lower into that $80,000 level, maybe into 72s from the previous, taking out the previous lows in 2025. I think that's a real risk that we have to be aware of to the downside. But with sorry for my croaky voice, I've kind of still recovering from a bloody chest infection. But with the downside risk, I think, like I've always said, when there's downside risk, that presents opportunity to think about potentially long in the market or buying into a spot position. So a lot of people will start leaning, oh, look, Bitcoin's in a bear market, we're going to go much lower. I just think, all right, we're a great trading opportunity. If I can pick up a long from much lower down, when the sentiment is shifting, that's certainly something to take into consideration. But the key for me is when you're looking to long against a trend, you want to be more conservative in trading the right side of momentum. I've been talking about this on Twitter, and I've shared a few transcripts from a book, which is The Unholy Grails by Nick Raj, and how you really want to be trading momentum to the upside. You don't want to be really knife catching on the downside, because you don't know how far that knife is going to drop further down and how much P&L you're going to bleed away. So would love to know your thoughts on that instance.
When it comes to Bitcoin, here's the annoying part. So with Bitcoin, it's the momentum is clearly on the down. It's giving you nothing to chew on, right? Momentum seems to be on the downside. I'm going to show you some other charts here to kind of tie in with that. But there's some that drove Bitcoin all last year and the years before, and always kind of gave you a heads up when the next trend is about to emerge. And this is this little unknown chart, which I'm going to share with you now. And it worked an absolute treat, and it's telling us again that it should have been back into a bull market. But so far, price action is saying, no, I'm not doing it. And that particular chart is called financial conditions. Loads of you folks might have heard about it. It's essentially a chart that kind of amalgamates loads of different indicators that kind of gives us a heads up on sort of the health of the economy. And I'm going to share this chart with you now. You get to see actually how long term it kind of performed, and why it's a bit of a letdown. It currently isn't doing what we wanted to do. So this chart here kind of updates on a weekly basis. You can access it for free anywhere, but it's a great way to kind of understand what's happening in the economy. Financial condition, as the name kind of says it, the higher this chart goes, the more tighter the financial conditions are, the more difficult it is to get your hands on credit, money is getting lent less, and if that happens, then there's less risk going out the curve. The opposite happens. So when this chart is coming down, it's fairly bullish for risk assets, and investors are pushed or pulled back into taking on more risk. That risk then moves out the curve and finds its way home into Bitcoin all the time for the last 5 or 6 years. This happened non-stop. So you would see like it goes up and Bitcoin goes down and it will go back down again. So it has this inverse correlation with Bitcoin to the T. I'm going to show you this here again just to kind of chart this so you get a feel for it, to actually see it on a bigger scale as well. So this is the inverted version of that chart. And then if I were to compare this with Bitcoin itself, you tend to see that the major swings have more or less always been in tandem with that, without any doubt. I appreciate this is the weekly chart, so the swings will come. They sometimes take a minute. And today's environment is eerily similar to what we had back in, I believe it was around July to September 2024 period. So was around here. The financial conditions eased dramatically, but Bitcoin was going nowhere. Actually, price action looked awful. So it was really difficult from a trading perspective to hold on to long positions, which we were at the time, knowing that liquidity conditions are largely favorable, but Bitcoin wasn't just doing it, and all of a sudden it just sprung. And this was even before Trump was actually elected. Once Trump was elected, we even went further again. I feel like we're right now in this pocket where price action is giving you nothing to chew on. But on a macro perspective, and the way that liquidity tends to inform us or give us a kind of a heads up on things, the drive for a bit more, the drive for an environment that's more conducive for Bitcoin to stay a bit more elevated is there. But again, it's got this disparity with price, and we just have to wait it out.
Yeah, interesting. Yeah, no, thank you for that. And what else would you be looking at when it comes to Bitcoin?
So when it comes to Bitcoin, a longer perspective, this is what I tend to look at. When it comes to shorter perspective and more short-term reactivity in the charts, what we tend to look at is sort of your near-term risk environment, your stocks, what's happening with yen, what's happening with credit spreads. So credit spreads, for those of you who know, apologies if I'm teaching you how to suck an egg, but credit spreads essentially is the difference of borrowing money from the government than borrowing it from a company, so or corporate bonds, right? And that kind of looks like this on the charts. I'm going to show you this quickly here. And the credit spread is a great way of gauging short-term risk appetite. When the spreads blow out or the chart goes up, it tends to be a bad thing for risk assets and doesn't look that great. And this chart looks like this. This is the credit spread. So when it goes down, it's great, everything hunky dory. When it goes up, that means usually that spreads are blowing out, and the risk taking is going the other way. It's essentially, it goes risk off, and it tends to move in spikes, as you can see here on the charts. I actually show you the daily, you get to see a bit better. It moves in spikes, hits extremes, and then just slows down again. Because the natural gravitation of market is to just go risk on, but there's pockets where they need to just withdraw or call in their loans and then move back into it. And this is the thing I tend to look at when I want to get a bit more aggressive into entries where I see, technical levels line up, the macros line up, and if I see this spike out, I tend to use those dip buying opportunities, and Bitcoin is an entry. Some similar we saw in April that kind of worked a treat. We saw it in other variations throughout the last year as well, 2024. The same tactics that all kind of worked out. It's more of, if you ever played Pac-Man, right? In Pac-Man, you kind of moving along. There's these four ghosts that are chasing you, and essentially when we spike out, that's the moment you eat that magic pellet, and all those ghosts turn like black, and you get to eat them. This is the moment where we see when we want to enter those trades, to kind of take an example from that game.
Yeah, I think this is a great pointer. When I look back at credit spreads all the way through 2024, when you see a spike in the credit spreads and you see the move index, you see the VIX all spiking, you just know that, hang on a minute, there could be a very good opportunity here to let the volatility subside. And once the volatility subsides, that comes with some really good opportunities to start looking for longs in the market, whether it's Bitcoin, whether it's equities or indices. You're really waiting for the extreme spike to play out over a 2, 3, 4, 5 day period. And quite often there's that phrase, isn't there, turnaround Tuesday, especially in indices, which is fascinating to watch, because I think we saw that in April, Miyad, when the Trump tariffs happened. We saw a spike on volatility, and then the following Tuesday, the market started rallying. It's fascinating just to understand the psychology of the market. But again, like you said, the opportunity that it presents is phenomenal. And as far back as I can remember, this has always been one of the best insights for me. And it was the same in 2020, late 21, 2022, when I was riding the bear market down. It was very, very powerful in terms of the insight and how to stay on the right side of the market. So yeah, take it away, Miat. What have you got for us here?
So just what Exo is saying here, so the top chart is your credit spreads. This is your move index, which measures volatility in the bond market. When they spike out, it's usually sort of like how to put this? It's a way of fear gauging the market really quickly. This is on a daily basis. And when those spikes happen and the underlying growth story or the underlying liquidity is still conducive to be more positive for risk taking than not, you find these spikes are just great opportunities to take from the weekends and just buy and hold. Every time you see these two spike out at the same time, particularly if they kind of hit intraday peaks, they are uncommon. You see these are tend to create like multi-month bottoms in the indices, and similar to what it did here in 2023. Literally every time you look at this, it's more or less created. Even in the abyss in early April when Trump was tariffing Penguin Island, even then that kind of signal, same thing, same scenario, kind of gave you really good indication that this is the time to be maybe looking at not the fear, but maybe looking at the other side of it. What else is there to come? And that then pretty much mark the bottom.
Yeah. So moving forward, Miad, how would you be looking to use this then over a period of 2026? Is it the same type of strategy where you have a portion of cash and you're waiting for something from a macro perspective to kind of position into, as well as your tactical trading? So what I'm saying is that, are you looking to be patient for the next several weeks or months? Should an event cause a blowout in credit spreads, we get volatility on the move index. Again, is the playbook likely to be the same for you?
So I've actually got I've got a bonus chart to show you. This chart which I'm going to share with you makes the analysis much easier, because a lot of what I've shared up to now takes a good pinch of empirical analysis, understanding the other moving parts. So this chart which I'm going to share, or these two charts which I'm going to share, makes life a bit easier in terms of gauging where we are in terms of risk and when there is time to actually buy the cheapest possible. The first chart which I'm going to share is the market breadth. Market breadth gives you a percentage of stocks that are running above 50-day moving average.
Sorry, Matt, just to interrupt you there. How did you do, what's the ticker for this? Is it MMFI?
MMFI on TradingView, if you generally just check percentage of stocks above 50-day moving average, loads of charting packages will give you that. Now, I'm going to hold my hand up here. This is not a strategy I came up myself. I actually found this from a Goldman Sachs trader who shared this in a video in 2014, which had like less than 800 views. Nobody looks at this, but I just by chance came across this. And he was basically saying that once or twice, and sometimes more times in a year or in a decade, you get these extreme volatility, extreme selling environments in indices. And when those extreme levels hit onto the downside, their risk manager will just open the floodgates of risk taking. It just allows them to buy whatever they want at any silly amounts. Those levels tend to coincide with anything below 20. And you can go back in history and see every time these levels were hit, it is just, I'm not saying put your money to it. I'm just saying maybe you should look at this, because I don't think a lot of people are. But every time these levels hit, some really interesting happens in S&P 500. You tend to get some massive rallies, or it's just almost always seems to be a generational bottom, like we had here in 2022. And even here in the midst of the bear market in 2022, when it wasn't a generational bottom, you had at least good 5 to 6% rallies, enough for you to secure the bag. That's the idea. So this is one thing I tend to use on big extremes in the market. However, this doesn't happen quite a lot. So for you who's looking at this and thinking, okay, I like the idea of, trading long term, but don't really sit and just trade 2 times a year or every 18 months when this signal shows up. There's a faster moving one as well, and which is a synthetic chart which we created. It's the short-term VIX contract over the medium-term VIX contracts. Again, it's a synthetic chart. On TradingView, you can create this, or any other short charting package. Essentially, this is the volatility contract you get to, you can actually derive from CBOE. What this chart does is very brilliant. It tells you when short-term volatility is higher than long-term or medium-term volatility, which in effect doesn't make any sense unless we are in an environment where we believe that the short-term volatility is going to be higher than the medium-term volatility for an extended period of time. And that rarely happens. As a matter of fact, I ran the data, it happens less than 7 or 8%. That means for me, every time you're going to hit these levels of 1 or 1.10, we tend to get some dip buying opportunity in indices, in NASDAQ, all of them. I'll show you this on the flip side. So every time you see these spike outs, you see that the dip buying opportunities were fairly okay. It gets a bit more aggressive once we hit the 1.1, and you see this happening much more often. So it gives you more rapid signals than the other chart I showed previously. The other chart is great for long-term buys and holds, in my opinion, or this time is great. This one is a bit more interesting when you trade a bit more intra-week, intraday, and you're a bit faster on the trigger with the trades. This has got a lesser degree of success, closer to 75 and 80, as opposed to the other chart I showed you is north of 90 or 95% over. I've checked these back all the way back to 2003, 2002. But this is another interesting chart which I will have on my dashboard on a daily basis, particularly as we're moving to the end of January and the start of February. I think this should chalk out another signal. So as a matter of fact, most recently we just about had near enough a signal, which kind of allowed you to get to see the bottom or carving out from the most recent dip buying opportunity in this last week.
No, that's great. I really liked the MMFI, I think it was called, because I'm looking to trade equities this year. But I'm in all honesty, I'm not looking to day trade or intra-week trade them. I'm looking at more positional trading. And I think one of the things that I've always talked to you about, in our private conversations, is that I'm really waiting for a market-wide correction. I don't care whether it's 3 months, 6 months, 12 months. I'm sat on a bunch of cash. I'm looking to buy some stocks in the stock market and equities. For me, when I look at the Mag 7, when I look at Microsoft, Nvidia, Netflix, and if you look at their monthly structures, there's just no way that I'm going to buy them at these levels. Yes, they could go higher by another 10, 15%. But for me, again, I'm looking at those big dip buying opportunities, knowing that the asymmetric risk to the upside outweighs any opportunity that exists elsewhere. And this is such a great chart to see that every time MMFI, when it does come down into those lower levels, if you're working part-time or if you're working full-time, I think these are the type of metrics that are really worth paying attention to, where you can make a handful of trades that are probably going to outperform whether you're a day trader or an intraday trader or intra-week trader if you don't have a system. But you really are filtering out high probability plays in the market. And I think that this is something that I like, that I haven't really seen before, Miad. So thank you for sharing this with us. Really good stuff.
Absolute pleasure. And I agree with you. If you're more looking for the big pictures, that's the way to look at it. That kind of does it. And again, it works time and time again, particularly when it was very important to be right. Because mind you, when these dip like that, it's max fear. Everybody's disappointed. Everybody's scared. Nobody wants to buy. When you have good data behind you, it makes it a bit easier to justify getting into some trades. Everybody can use on their own. Probably makes it a bit easier to trade in the community, bounce off ideas, bounce off data. But generally, you have this chart on your dashboard. When the extremes hit, you're going to be in a good spot, I think, to take some action. And again, if you are more towards, as Exo said, he's more waiting for the big swings and the big ideas. He's not interested to interact on a daily or intra-week basis. Mind you, this is where he ground his teeth. But as he's progressing in his own journey, he's more looking for the juggernaut trades, and I understand. I respect that.
Yeah, I think for me, look, I'm an active trader. This is my 10th year of trading. And what I want to do is, for me, the reason why I'm shifting back to the higher time frames, especially equities, is because it's more of a lifestyle decision, but also noticing that, as a trader, I'm far more comfortable sizing up on the higher time frame swing plays, which could play out over a 3 to 6 month period. So really, I'm looking to become more of an aggressive momentum buyer. So if when I see prices collapse and we get a shift in momentum, I really want to latch onto that trend. What we saw in April and May was a fantastic example of that. That even if you have a simple moving average system, which I've shared, the 12-21 weekly EMA, if you apply that to the indices, any indices or your favorite stocks that have momentum, you can drop down. We drop down onto the higher time frames and actually perform really well. And what you were essentially then doing is becoming a momentum-based trader. So the question is, Miad, when it comes to Bitcoin, do you have anything similar that you kind of scan for? Have you got any alpha there or any edge there? I'm not talking about trading Bitcoin from a week by week basis, but more of a, do you know what? I think we've seen enough of a capitulation here to warrant picking up some spot exposure and holding it for the foreseeable future, whether it's a 3-month rotation, whether it's a 6-month swing position. But you know what? We can make 30, 40, 50% on the upside just by holding spot. I'd love to know what you've got there in terms of, how you actually identify. Because I remember back in April 2025, you pretty much nailed the bottom on Bitcoin. And you were one of the few people that was calling for higher prices, which you nailed really, really well. Would love to know how you came to that and potentially tools that you're looking to use. For those of us who want to buy Bitcoin spot, how would you go about doing it?
Great question. So when it comes to Bitcoin exhaustions and for me to understand where it wants to turn, unlike with the indices where this is just a line you can look at and treat it a bit more blindly, with Bitcoin, there's more feeding into it. And which doesn't help with Bitcoin. It's not a centralized exchange. So you need to kind of get your data from many different places to understand how volume is evolving. But to make life a bit easier, when I look at Bitcoin, when I think Bitcoin should be up in regards to its current level, so if it's got more downside to it, what I always tend to look at is at the mood of the market, right? I really like to see that exhaustion which we saw in November. We like that. That was exactly the sort of a price action I was anticipating. So from October to December, the writing was on the wall, and we kind of spoke about it. That something's going to happen. We don't know what's going to happen, how it's going to look like, but when it happens, we'd be very interested to get into those trades. So come, I think it was around early to mid November. It was becoming more and more obvious that sort of a let's not call it a bottom, but the exhaustion should materialize by the beginning of December. It came a bit early, actually came about 21st of November, but by beginning of December, we had opportunities that looked like pretty much that the recent low that was planted in November would have been the catalyst to start scaling in. And true to my word, that's exactly what I did. I started scaling into those positions in Bitcoin around the levels of 87, 80, 88, 89, and kind of loaded up whenever I saw these opportunities. And throughout the holiday period, price action was not giving you any comfort at all. I was just giving you red candles, bit of green, and then just more red candles, and just death on just chop. And then all of a sudden it kind of started rising. Everybody started to think, oh, maybe this is the bottom of Bitcoin. Then it kind of rose again until it kind of hit these 97K levels. And then something shifted when it comes to risk. That kind of alluded to the fact that this is not the move. It was not meant to go that way. And it's still coming back for more. So we kind of had to tighten up, and we pushed out messages to making sure that we kind of lock in some of those gains as well. Long story short, what alludes us to the fact that we find those bottoms is when you see those exhaustions that come from the original risk market, so like stocks and shares, but it also coincides with this chart I showed you moments ago, the liquidity index or financial condition index. I think it's a brilliant chart because it saves you doing a lot of reading to understand what's happening in the economy. When this goes up, it's very straightforward. There's not enough money to go around. When this goes down, there's a lot of money go around. And when there's loads of money go around, eventually it'll find itself in riskier assets like Bitcoin and further out the curve. But this takes a minute to kind of reach the rest of the market. This usually runs about 2 to 4 weeks behind before we see traction in Bitcoin, that sort of a thing. So since that turnaround here we saw over here until now, we should expect that kind of start feeding through, and we might see a bit more resistance to go lower. That's supposedly the word I'm looking for, and that chart treated me really well, particularly when it came to the bottom buying idea in April 2025. Did the same thing. So I saw this sort of a top pattern forming, and with these liquidity things, you can kind of have a 1 or 2 weeks heads up of where it's headed, with the way yields are going, with the way what Treasury is doing. That will take a bit more digging into, but that's the job we do. We do loads of research before we actually look at a chart. And I kind of always telling you this is kind of topping out, liquidity becoming easier, and that's what happened. We just put our money to it and kind of worked out. It sort of worked out in December as well when we bought it, but I feel like it's coming for. I think it's coming back for more before we might see a bit more resistance to go lower and we see a bit more supportive environment. This doesn't sound too exciting. I get it. Everybody likes to hear, Bitcoin's about to moon, that sort of a thing. This is not it. It is more about understanding what sort of environment we're in. Can we risk a bit more? Should we maybe step back a bit? Think about it a bit more like the Pac-Man game, right? We haven't eaten that magic pallet yet. We're kind of waiting for it to arrive.
Yeah, no, great stuff, Miad, great stuff. Okay, what's your thoughts on, should we move away onto the dollar? I think we can wrap up in the next 10 minutes and should we cover the dollar? And just a quick overview on what's happening with the dollar. We've seen equities rallying and pausing, but gold and silver have been performing really well. I wouldn't want to call the top on gold and silver, but it is starting to look somewhat parabolic. And then you've got the breakdown in dollar. What's causing the dollar to go down? Can you tell us a high-level overview for the viewers that what on earth's going on in Japan? What's happening with the dollar? From an
There's
FX
a couple of
point of
things,
view.
interjecting into each other. Dollar really hasn't done anything since April. I know the chart looks a bit more aggressive now, but really looking back since April, it's kind of more or less at those levels. It kind of dipped a bit lower, maybe June area. However, the issue with dollar is that when it's going down, this didn't happen in the past, and I think that's where the confusion is. It's going down together when equities are going down, where in the past it was the other way around. Dollar would go down, equities used to go up. There is part of that repatriation from US assets towards other assets in Europe, particularly because Europe is trying to rearm itself. But there's also some other dynamics playing into the game, like you said about Japan, where Japan is they're trying to do something that hasn't been really done before in the past, and they're more or less successful at it. I'm not going to go into too much depth about this, but essentially Japan is trying to take market share or GDP away from China. And this is what this whole war is about. It's nothing to do with USDJPY, any other market. It's really just between China and Japan. They are head to head. So the long story short, in the FX market, when one currency devalues against another and makes exports of that country cheaper, it's just easier to buy. And if you tell anybody you have this Chinese good and you've got this Japanese good and they're both the same price, usually people tend to go towards the Japanese good. So essentially, this is a shadow war that Japan is running with the help, I believe, of the Treasury to kind of run down yen to make it more attractive for importers to buy more Japanese good. And when you look at the trade data, GDP is the export growth year on year is moving more in favor of Japan than it's moving in China. However, it's kind of hitting this zenith where it can't really move a lot more without Japan needing to how to put this, needing to reevaluate some of the books. At the core, Japan is short commodities because they need to import oil and loads of other stuff. So they kind of can't keep running these sort of stupid levels without hurting themselves. So I think in the short term we're going to see this dive towards more normalcy in Japanese yen towards all assets, not only yuan but also USDJPY. And I think this could be the start of a very interesting move in yen pairs. We've got these gap opens as well. If you've done your research on gap fills, they tend to get filled quite a lot. And for USDJPY, I think this chart closed 155.76. I think it's already trading a bit lower, but this gap is still a good 600-700 pips away. And you'll find me more towards trading towards that direction than the other if I see good and valuable entries.
Did you latch onto this one? Because this was a setup that I missed, but I also wasn't feeling too comfortable fading it just yet. But no, I agree with you. I think there's plenty of downside capture. It's one of those trades, isn't it? Especially, I think dollar yen has been such a good pair to trade me at because the swings have been fantastic. If you look at what happened in 2024 and 2025, it's really been quite volatile, I believe, from an FX point of view, considering how subdued the markets are. There's some really good big swings here, aren't they? And they seem to happen once a year so far. You look at the downside in July through to September. That's a huge rotation from an FX standpoint. And then to rally all the way back up again, it's just been a phenomenal market. To trade from a true swing perspective at those massive key inflection points that, you just got to figure out what the trade duration and trade time is. But again, I think when you zoom out, look at the number of rotations there, this is on a weekly chart. It doesn't look like a great deal, but it's a really clean range. If you look at the range lows at 140 to the range highs at 157, 160, that's where I'd want to be doing my business, around those extremes and looking for a mean reversion, at least back to the mid, and then from the mid to the other side of the range. I think this is going to be a fantastic pair to trade throughout 2026.
Your bread and butter, right?
Yeah,
this is literally where
you can just wait months and you just know, all right, there's actually going to be a big trade here at some point. And you can really size up on this and chalk off some very high probable plays. I absolutely love the dollar yen and the opportunities that have come with it over the last 2 years. And once again, I didn't want to fade it too early because I was thinking maybe we could run 160s. But now looking at the candle structure on the weekly, I think this is likely to be a sell, give or take if there's another bounce. But I certainly see a rotation back down to that 147 level here. That's going to be a big trade for me.
I agree, and I think me and you were both kind of eyeing this for ages now. We were kind of waiting. I always thought we're going to maybe clip or at least threaten this area around 162. And what I love to see was people talking about 170 USDJPY, and that would have been my signal to short. This hasn't really materialized that way yet, and I think the Bank of Japan or the Ministry of Finance, MOF, has started doing rate check, and hence we saw this massive dip on Friday. And that usually tells you this is the sort of a pain threshold where they don't really want to see USDJPY move much higher. Saying this, if I show you this chart, this candle here, obviously around April 2024, some similar happened and then kept still ripping higher and then eventually dipped down. But right around these levels, we are not far off from a massive intervention that kind of should see the 147 level. I think will act as a sort of a magnet. It's going to be a good trade this coming year. When this happens, risk will be off. When USDJPY moves 500-600 pips, everything else will move with it. I can almost guarantee you that.
What would be the implication on the Nikkei if that happened? Because that's the market that's really been on the tear, hasn't it? When you look at where it's come from and where it's got to, and so what does that mean for the Nikkei? Just for the audience, so they can understand the implications there.
With the Nikkei, they've got a really strong correlation with USDJPY. That doesn't always mean they're going to move in lockstep, but it means that the momentum moves tend to be in the same direction. But you can see with Nikkei, the magnitude is very different, right? Look at the magnitude of what happened here to Nikkei. It absolutely exploded higher. I'm pretty sure it hit all-time highs. What I can expect happens very similar to USDJPY. When that move starts to transpire, Nikkei won't be far behind. It will easily hit 40k in my opinion, and maybe even probe lower towards the 45k level. Usually these indices, they like to seed within 5-10% moves, and then 20% move will kind of call it a massive bear market. So I think right around these 43 to 45k would be very interesting to start looking at the indicators I showed you where I look at dip buying opportunities. If it really goes into the aggressive territory of bearishness, that is.
Yeah, you see, for me, this is really important, Miad, because one thing I've always advocated for is try to understand what's going to cause downside risk in the markets. If you really want to do well in trading and be on the right side of the market, look outside of Bitcoin, look at the markets, and if there's one trend, in fact, if there's one theme that I've seen play out throughout 2025. And for those of you who follow my good friend Tom Capital, Miad, you've seen Tom Capital around on the timeline. He's often trading the Asia session, and the one thing he's always picked up on are there's two great things that he's really picked up on in 2025, is that watch out for the Nikkei or overnight Asia session. When you generally see weakness in the Nikkei, is probably when you're going to see weakness in Bitcoin and weakness in other indices, whether it's just a day trade or an intra-week trade. The second thing that he's nailed is that Bitcoin has this tendency to really perform, especially on the downside, really poorly on a Thursday. I don't know why that is, but Thursday seems to be the day where Bitcoin has often seen some of its largest moves throughout 2025. So when I think of this from a risk perspective, look, what we're saying here, Miad, is that, look, if we expect dollar yen to break down to 147s, is it fair to then assume that we could see a breakdown in the Nikkei, which is then subsequently going to affect the equities and indices market, you know, the Nasdaq and the ESN. What does that mean for Bitcoin? Because how I see or perceive Bitcoin, it's not a hedge against inflation. If you look at gold and if you look at silver, they've been performing really well. But I think Bitcoin performs more like a risk-on asset, which is kind of a measure of liquidity, and such that if we do see a breakdown in equities or the Nasdaq or the indices, then I think that's a risk to Bitcoin as well. In fact, it's because Bitcoin is slightly more of a higher beta asset. It could really push down into that 70k level should that come to fruition. So I think that's the risk factor here that I'm looking at, that I don't want to be on the wrong side of the market, knife catching, when the trend is clearly to the downside. I would love to know your thoughts there.
So to bring parallels in there, when USDJPY kind of touched down back in July, August 2024, and indices kind of all rapidly kind of collapsed, Bitcoin bizarrely held up fairly well. It kind of dived, but it kind of recovered fairly quickly as opposed to any other assets. And I agree with all fronts. It wasn't a hedge against inflation, very obviously. Recently, it didn't do that. But I think that the recoveries, or when that market hits, because Bitcoin already kind of did its downswing, I think the recovery should be a bit shallower. Sorry, the dips could be probably a bit shallower than all other assets because it already gave so much ground away. So that's what we're looking at going forward. Again, the dynamic here is that there is something happening. We don't know what it is. If it does happen, these are the tools we will employ to find better trading opportunities, both on the downside, both on the upside. And in terms of where things should be headed, on a long-term trajectory, what Nasdaq does 12, 13%. So if you see it down 10%, it might be an opportunity to go towards that. Currently, it's not doing any of this. Nasdaq is not throwing you any bearish signals massively yet, neither are indices. But the things are brewing towards that. Things should be very interesting, particularly if you trade in stocks. And if you're not, I think you should start looking at it because the majority of the money will be made within stocks, I think, in the next few years because that's where the concentration of assets and interest is. Whether it being US assets, some of the European ones like DAX, or even the Nikkei, I think they will give you more bang for your buck. Where some of the other assets, I think the liquidity is a bit more restrained currently.
Yeah, all right, Matt. So look, final question. Where are you looking to do business on Bitcoin? Gun to the head. And if you, if you get it wrong, I'm going to bring you back on stream and say, Miyagi, we were wrong. Sorry, but no, I'm joking. But where are you looking at in terms of Bitcoin for potential levels of inflection points? I reckon there's a decent chance we could trade that 75k level. I really do. If you don't, then fine. It wasn't to be, but I really like that low there. I think could we come down and take out that low, and then if we get the reaction, I think it's going to be at least a good trading opportunity for some longs back up. And if we just bleed through that level, then guess what? We're going to buy $65,000 on Bitcoin. What a great opportunity that is, I think.
That is where we're headed right now. So from a sort of a technical perspective, this recent level here around 86, 85 is sort of the last bastion. We start dipping in there. I think the path of least, I'm pretty sure path of least resistance would be more towards the downside, heading towards levels like you said, 74, 70, 75, and this is where we'll be looking at maybe to engage on the long side. I only will do that if I see everything else moving in tandem. For now, as long as this doesn't give way, I don't see it move. I don't see it panning out that way. I'm actually still at heart, even though not via positioning because I had to go flat. I still think at heart we can maybe hold these and then start attacking the 100k level, which was my view all of December. So I had to buy it, and then I bought it. I got out of it, and I'm hoping for this to transpire. But if I give these levels away, it's very obviously it's coming. That's all right.
All right, we should be back. Sorry about that, folks. Also, all sorted. Sound is back. Yeah. All right, sound is working now. Not sure what happened there. We kind of lost connection, and we'll see what happens. All right, so basically, look, just to summarize, I mean, we were coming to the end of the stream anyway. Technical glitches happen, just part of what it is of live streaming. But I think, long story short, just to summarize, I think, look, the fact that if we break below this 85K level, I think it opens up the floodgates to potentially take out this low here. If we don't, okay, if we just come down and take out these lows here and go back up, I think that's going to be an area to sell. I really do. I think maybe we get a sign of weakness and then we get the bigger drop lower down. Okay, if you look at 2022, it's kind of what we had there. Really, when you look across the line, that, oh, look, we've got a bullish breakout here. We're pushing up higher, which gets rejected, fails to take out the lows, pushes up one more time, taking out all the previous highs, and then we get the big drop. And I just don't know whether we're getting the big drop now, and it wouldn't surprise me if we do. Equally, I think if we just stop short around here somewhere, take out these lows, but we leave this one intact and leave this intact, then I think there's a good chance we push up and take out this high. Then we'll have to see what we do at that 104, 102 level, whether we get a reversion back inside this range. If we do, then I think that definitely increases the probability for a big swing down to that 74, 75K. So it's just a case of, all right, what happens now in this region? I think if we start trading through it, we're probably going to take out this low and come down into a potential double bottom type structure for a trade back up into the range, at least to the mid, into 85s, and we'll take it from there. But really the key thing for me is, look, I've been keeping it ever so simple since we've lost momentum on Bitcoin. And if you really want to keep it simple or follow what I'm doing to a similar extent, by no means is this financial advice, but just use the bands. It doesn't get any easier than that. When you look at the daily time frame, look at what the daily is telling you. We've just lost the 1221 weekly moving average. How many times have I talked on stream that when you get a large period of green, short period of red, followed by more green, you want to remain bullish until you come to the extremes of a range. When you start breaking down from the range highs, that's a reversion to the mid to the lows. But look what's happened. We are now trading on the daily a large period of red, followed by a very short period of bullish green, okay? Now the fact that we're back under the bands. So not only is the weekly on the wrong side of the bands from a bullish perspective, the daily also is signaling that there's inherent weakness in the price action of Bitcoin. So if I really want to get bullish, well, the first thing that I would need to see, I would even drop down to the 12-hour and say, right, if you can show me that price is going to trade the extremes of a range into a key level and reclaim back inside a range and flip bullish, then that's context for me that I could take the long here, but my bullish context remains to the upside, okay? But if we can't seem to do that at this stage, then I'm certainly going to be just waiting for the knife to drop. And if that means price trading through these lows, lower down, and then we get the reversion, fine, I'll take it for a trade. But if I start seeing the bands do something like this, where price sits above the bands, uses it as support, then you get the breakout. Well, guess what? That's kind of the inflection I just showed you in the 12-hour. That's the daily. That's the kind of shift that I'm looking for, to think, oh, you know what? We could actually go all the way back up now to 95, 96, maybe 100K if we get something like this, all right? That's kind of the high time frame view that I'm looking at. If you look at this rotation here, this was a rotation from 75K all the way through to 97, all right? And if you look at where we broke down from previously, look, we break down, we consolidate, and then look at the extension down, okay? All the way down into that 77K level, rally back up into 96s, back down, okay, and then into new lows. When you keep it really simple and you think about what Bitcoin is doing, it's effectively trading around this range. That's just how I see it. This is where the bulk of the price action has been. And it doesn't get any cleaner than that from a range perspective. When you look at the inflection points here on Bitcoin, inflection point, and another one, okay, acceptance above, support, a level of support. Look at the breakdown through it. Retest the high. This for me is the range that we are currently in. And so, again, the fact that I'm only trading the higher time frames on Bitcoin now for Q1, I'm happy to wait. Either we take out this low or we take out this low, get close to taking out these lows. But the key inflection points that I'm looking for is number one, okay, just regardless of how deep it is, inflection points, okay, zones. That's one zone. This is another zone. Potentially, this could be another trade setup if we get a deep push, but it doesn't quite trade this low. It just falls in some of the efficiency, shows acceptance back inside, and it holds. That for me is a trade to think about. All right, I think we could get a mean reversion from 85s back to 92s, 7K rotation. I'll take that with a clearly defined risk somewhere at the range low. Okay, that's kind of the setup that I'm looking for, and that is going against the trend, but you know, I'm looking for that mean reversion trade back into the weekly bands if it sets up. Do we get a move down, take out the lows, and if you've got the 12 and the 21, then it's a classical mean reversion play for me. So that's kind of my high level overview of Bitcoin. I'm not looking to do anything here. I'm just going to wait for price to show me what it wants to do, and then I'll figure out, all right, it's time to take a counter trend trade. This is not something that I want to short at this stage. I think the shorting opportunity for me was this. I positioned for it. I kind of took profit too early. It happens, you know. Let's just see what we get lower down. So I don't know if there's anything that you've got left to follow up with. We kind of got cut off stream earlier on, but
I'll leave you with this. So from a technical perspective, there's a 70 to 80% chance that we break down 85 and we start trading 75, 65. From a macro perspective, there's equally 70 over 80% chance we actually trade higher from here. So we're at this funny spot. Do you either trust your macros, they're saying liquidity is good, should be going up, or do you trust your technicals? We're in this beautiful environment. I'm more towards my macros, you know me. So that's the direction I'll be mostly inclined to do. If you convincingly punch below 85K, I'm gonna just let price do its talking and shut up until otherwise.
I think that's a fair shout. All right. Before we wrap up, Miaz, you know, I've always been a big fan of your work, you know, from a macro perspective, from an FX perspective. There's only so much that I can cover from a market's point of view, but do you want to just give us a plug about what it is that you do from speculators trading? For me, it's one of the best services around. I don't really see it as a paid group. I see it as somebody who's got a very good grasp of equities, indices, macro risks, FX, and for me, it's been fundamental in my own learning and my own journey. So, you know, thanks for having me in there, Miad. And if you just want to give a quick overview to the users about what speculators trading is.
Yeah, and in speculators trading, what I do with the community and the community together, what we try to establish is, you might not find today you join everything will change, but a month from now, a year from now, you start thinking differently about different things in the markets. Like today, we talked about market breadth, and you can kind of see how this is very, very powerful at the right time. And you're going to start building on these tools 3 months from now, 6 months from now. You're going to have more tools that are really powerful in a wide environment. You start kind of developing the internal strategies we kind of talk about on a daily basis. And this is really what happens when you come and join us as speculators trading. We just build things up from the ground up, build trust, build data. And a year from now, you won't even recognize where you were before. So hopefully I get to see you all in there and get to know you.
No, I appreciate that. And just for transparency, I've not been paid, or this isn't a shield from me. This is just me genuinely sharing my ads work. And if you want to get more access to it, there is a code for any viewers who watch the channel. There is a 20% off coupon if you use the code XO. Like I said, I don't receive any affiliate or payouts for that. It's just to give you guys a discount who've watched the streams. Feel free to take advantage of that if you wish to do so. So thank you for that, Miad. And once again, thank you to everybody who's tuned in and watched the stream. I probably will be back on stream again in February, and hopefully we'll have a clearer setup and understanding of where we are in the markets. And we'll take you from there. Wish you all a fantastic week ahead. And don't forget to take advantage of AI. I'm certainly going to be looking to plug into Claude Bot this weekend or tonight after this stream. It's something that I've been looking forward to do. Hopefully I'm fit enough and well enough. And I really do recommend you all to kind of explore the advantages of AI, Claude Code, ChatGPT, Codex, Gemini, whatever it is. Give it a play around. I think it's going to be so beneficial for your trading and for whatever other hobbies you have going forward. So again, that's kind of where most of my time has been spent in Q1. I think it's just a glorious opportunity to upskill, really use AI and technology to enhance your trading. And I can't wait to share what I've built come Q2. Wish you all the best. Have a great week ahead, and we'll catch you soon. Take care.
Bye, everyone.